May profits be upon you. How are you doing on a Sunday? Happy Father's Day to all the fathers out there, the proud papas. All right. And if you're a sorry father, hey, it's still Father's Day, man. Use today to turn over a new leaf, all right, and do something good for your kids, all right? Do something good for your kids, which will be doing something good for your soul. I thought I'd start off with a bit of positivity, my positivity pill for the day. All right, the vitamin, the positivity vitamin. All right, let's look at the RT money meter. Let's get right to it, because what we're going to do today is we're going to go over the doggone pound JPY. All right, now I'm giving you a warning. All right, JPY is the weakest in the rankings, has been for weeks on end. All right. And it is, last week it was at minus 13.98. This week is at minus 14.48, a marginal drop, almost negligible. But being the lowest and weakest of all the currencies, and the BOJ just having what was it, Friday that they or Thursday they had a chance to increase the rate, and they chose not to. They want to keep this currency devalued. Okay, we understand that. We also understand that pound is the second weakest of all the currencies. It just so happens to be a lot stronger than the yen. Okay, and we'll see that reflected in the charts once I get to the charts. But what I want you to also notice is that last week it was at minus 8.16. This week it moved up a little bit to minus 7.47, going this way while yen is going that way. All right, one is trending up a little bit, the other one is trending down incrementally. All right, so that's something to bear in mind. We also had a rate hike with the pound that just happened. Just this past last week, at the end of last week. So listen, those are the conditions. All right. So as of today, I am looking for buys. All right. Look at this. This is the weekly. All right. We've been bullish since March 16th of 2020 for 2 years. We've just been moving up because the yen has been very weak and getting weaker, and the pound is trying to find some stability, because we understand the UK being inundated by inflation and all, and that's hence the rate hike. It was a conservative rate hike. Okay, they're taking a very conservative and methodical kind of approach to staving off inflation and all, and dealing with the energy crisis over there because of the war and all. So you can see that it's been we've been a little up and down, but it's been more up than down. We see that pullback here and then up again, right? Causing this for support and resistance, guys, a double top here. All right. I don't take double tops in isolation. I don't take double tops in a vacuum. All right. Especially in a bullish scenario. I'm seeing a double top. I'm going to take sells from here. No. Not me. You can, if you're a support and resistance guy. All right. You can if you want to. I'm not. Why? Because trend is your friend. It's not it. Any counter trend trade here, I will be looking for confluences. I'll be looking for confirmations that say price is definitely reversing here. That's when I will take counter trend trades. All right. Intraday trades during the session, you can always get a scalp in. You can always take some kind of short or whatever. All right. But I'm looking at a larger picture. Now, I also want you to understand this too. Where are we heading? Oh, I didn't finish what I was going to say. All right. Just understand that the yen could turn around. The yen could turn around on a dime. Why? Because if we see some capitulation in the markets, talking about the indices, the financial markets, right? If we see a sell-off, a panic sell-off, because people are thinking the recession is inevitable and they're going to start panic selling and stuff and trying to think they're trying to save their retirement accounts and all. Listen, the yen will outperform the US dollar in this scenario. Okay. And the yen will benefit from this panic selling. It'll outperform the US dollar, and it will definitely outperform the pound. All right. So these are the conditions we need to watch for. All right. I'm giving you that warning straight up from the beginning. So remember that, make a note of it. Just be careful. Go with the trend until the trend ends. If the trend ends, then you start looking for sells. But right now I'm looking for buys. All right. So where are we at? We see that price pulled up, broke this. Come on, man. On a Sunday. All right. We broke this breakout level here. I like to see that. All right. Came back. We were in this consolidation, excuse me, broke above it. Came back, retested. We see this in the US dollar yen pair as well. And then price found its footing on the retest of the breakout level and is coming up. I really like the way this candle looks. All right, that's a weekly candle close. That is very bullish. Okay, that is a very bullish candle. All right, a nice rejection, and we're gonna see if we can get some follow through. These kind of candles, when there is more, there is body, but the wick is a little higher, I tend to see these wicks get filled. Now we got 2 wicks here. All right, that would give anybody, any support and resistance guy, the indication that this is a double top, man. We got to go for it. You know, we got to take these shorts. You can. You take it in the vacuum. It's a 50-50 bet as far as I'm concerned. All right, I would take shorts from here if I see some confirmations on lower time frames. All right, a change of character on the 14, at the very least, a change of character on the 15-minute, but I'm not even going to go into all of that. What I'm looking at is price pushed up, came back, returned. I'm saying this is textbook. This is textbook. Look at this. This is the weekly zone of demand. This is textbooks going with a pro trend trade with bullish order flow. This is where the sell-off happens, the selling starts, and the aggressive buying starts. This is how you mark an order block, as I learned it from ICT. And when at the point of where it breaks that's the start of the selling. All right, this is where you mark it. Price came back, mitigated this doggone bullish this zone of supply. Demand. All right, we hit the demand zone here. So lovely. All right, this was such a beautiful trade. Such a beautiful trade. If you were on this, I would you could have, I would have entered at a smaller on a 1 minute time frame, so I can get the better risk to reward. But if you took it if you were aiming at the top here, you just made it. It just broke the top to take liquidity, because that I always aim for the high, and that would have gave you all kinds of. I mean, look at this. It was a 1 to 10. I mean, it's it just would have been lovely anyway. But let's get rid of all of this. So what I'm going to do is I'm going to go down to the daily. Just wanted you to see how that candle closed for the week. Very bullish. All right. This is the daily. All right. Classic double top scenario. Right now, I see what I see here is the reversal here. Boom, boom, boom. Right. We see price come down, push back up. I'm looking for the candle that is not part of this down movement. All right. And all of these break the lows of the previous candle. Right. So once it breaks that here, all right, because this candle marked that the last candle that was part of the down move, push back up here. The high of it is here. I'm looking for an inside candle to take a to mark where I would mark a change of character. And once it breaks there, you look for price to come back into this zone to test what? A return to impulse, right? The same kind of scenario, the same scenario that just happened here. You're looking for it here. A push higher, we break highs, we break structure, and then where does it come to? The last, this decisional zone of demand. You know, it'd be nice if it came back to the origin, but we always look for a return to impulse. Can you not see that price started to impulse from here? All right. That's easy. That's easy for me. I mean, that's just easy. And look at the momentum in this candle. Look at the momentum in this rejection. Boom, boom. All right. Do I expect a bearish candle behind this one? I do not. All right. I would think there's a higher probability for a bullish candle because there's no wick on this thing, man. You know, there's no wick. I would tell you that there is a possibility that price gaps up when the market opens. I'm looking for this high to get taken. Why is that way over here? I hate it when the Trader View does that. I'm looking for this high to get taken. I love to see that we had a impulse, a correction, and a new impulse. And I want to also show you this. You see, if you use your fibs, you can see that this was a perfect pullback to the golden ratio. All right, we're past the 50%. This is the trading range. All right, you divide it in half. You got premium prices here. You got discount prices here. This is where you want to take your long positions from discount pricing. And voila. All right, I'm looking for price to continue up. Maybe when we gap, because I'm pretty sure we're probably going to tap that. If we gap up, I don't know why I think we're going to gap up, but the momentum is so strong. I'm just thinking that's what's going to happen. Price will come back to close that gap. We may come back down to the last support area here. All right. Why do I say here? Look across. Boom, boom, boom. Look at all the interactions at this level. All right. Maybe we come back here. All right. And price finds its footing and then continues up. Okay. Or price could just continue up from here. Going to the 4 hour. Should have did all of that on the 4 hour for real. Okay. But I'm sure you guys can dig where I'm coming from on this. All right. So going to 4 hour here. All right. I got too much energy on this. Is it the coffee? I don't know. All right. So, look at what price did on the 4 hour. All right. This is where we plan. This is where we plan on the 4 hour. This is where we make our money, right? I'm looking at this zone here. Price has closed higher here. Did we take the zone out? No. What am I looking for? I'm looking for a possible flip scenario. I'm looking for a possible flip scenario. We took out that high, but did we? No, we still have this one here. So we have an incentive for price to go higher to take this relative equal highs out, which is a draw to price because people have stop losses up here and market makers are going to want to come and take that out and then shoot down. But did this, in my eyes, this supply held. We did not get a break and a close above that high. All right. And you see where the close and open is at. It's at the midpoint of this zone. All right. I love to see that. Let me move that up. Yeah, I love to see it. All right. So price breaks down. We got a little bullish pullback here. I suspect we'll tap the midpoint of this the zone again. All right. Before maybe a pullback to that area I was talking about earlier. All right. You see this this zone here is interesting to me, that rejection, because this is at the same level of the zone I pointed out earlier. All right. I love how these things could add up. So if price comes back down, if price comes up here, tests the midpoint again, comes down and finds its footing, I'm looking for price to come up, take out these relative equal highs here, and take out the highs up at the top. All right, this is a impulse correction and impulse scenario. ICI, as I learned from my man Nick. ICI, that's what I'm looking for now. All right, so we're looking for bullish scenarios. Let me give you my lines. All right, maybe it comes down to here and then up. All right, or it may just go up from here. It may just continue high from here, and that'll be cool. I'll be ready for both scenarios. I want to take out the this high and continue pro trend. All right. Now, in the case that price does not go any higher, and that the yen finds strength because the markets are capitulating and lions, tigers, and bears, oh my, if everything starts going into a spin, what I would look for is the failure of demand, because demand is in control. It's a bullish market. It's a bullish market. And if I see if I see demand fail here, if price comes down here, starts breaking down, I'm looking for that pullback so I can take a trade to the downside. All right, that would be a confirmation to me that this is the strongest confirmation. I'm gonna tell you right now, if price comes down here and then we get this pullback, and that's the scenario I think is more likely. All right, but once it does this is a confirmation. If we break that low, this is a confirmation for me, and it has to respect this high. All right, it has to respect that high. I'm looking for a high. I'm looking to take a short from there if price starts breaking down demand zones. That's it. I'm not going to confuse you anymore from here. All right, this is an if this then that kind of scenario. All right, I'm looking for more bullishness to continue pro trend with the bullish trend. If we see price starting to take out demand zones, be prepared for shorts, especially if it returns back up here after it takes out this demand, or especially after this demand. This is a more conservative approach, because this is, like, for me, a big confirmation. So if it comes back up here and respects that high, respects this zone of supply, then you need to be looking for shorts. There you go. I will see you in the next video. Check out my weekly outlook video. It's checking every currency on its own, the individual currency futures. All right, and that'll give you a better gauge of its individual strength or weakness. All right, I'll go into detail on that video, so it's a must see if you want to plan for the week ahead, if you're going to trade for FX pairs. Okay, I will see you in the next video. Thank you for watching. Do hit that like button. Do it now. All right, make sure you subscribe, and make sure you hit the bell icon for notifications of my updates. And I love your comments. You see, I love your comments. I always respond to every comment, whether it's a question or whether it's like, bah, humbug, you and your smart money mess. Get out of here. All right, just leave me a comment. I'll respond. I'll talk to you later.